Hello, everyone. Welcome to our second IFSA talk. We hope that you already have seen the first one, but if not, of course, you can do it by searching for our channel IFSA Network on YouTube platform. And so we would really appreciate if you would do that. I am Lukas from Vilnius University Student Investment Fund, and today I'm going to coordinate our second talk. Today we are hosting a very unique person, Karolis Kybartas, who is a professional investment manager at Girteka Logistics, a huge company specialized in logistics and supply chain. Karolis has a lot of experience in field of portfolio management, and today he's going to talk about his success stories and of course give some tips for younger generations about how to do business, how to invest, and about his career at all. So we hope that you will know a lot of new things while today's meeting. So hello, Karolis.
Lucas, thanks a lot for the introduction. Hello, everyone. Really great to be here with you today. Thank you for making me come to the office this Sunday afternoon. I think, as Lucas said, I hope I will be able to share with you some of my experiences, some of the tips I think are valuable for career, for life in investment management. So I hope we will have a great time together in this upcoming hour.
So first question, Karolis. Right now you're working at Girteka Logistics, a huge company that is stated in Europe mainly. Could you tell a few words for our viewers? What does it really mean to be investment manager? What does it really mean? What the work is all about, and basically what you're doing at work?
Absolutely. So that's a great question. So my official title is investment manager. That's my profession, but I prefer to be called an investor because investments is not something that I do 9 to 5. It's something that I live with every day. I invest personally. I teach people about investing, those kind of things. So as Lucas correctly indicated, I work at the Girteka Logistics as an investment manager. So basically, the job of an investment manager is pretty straightforward. Basically, you have an investment strategy, and in the lines of that investment strategy, your goal is to get the best returns with the least amount of risk. Everything starts with coming up with the investment goals. What's your return criteria? Then we discuss what are the risk limits. And basically, then you construct a portfolio with different asset classes, which is called a strategic asset allocation. And in the limits, in the weight limits of that strategic asset allocation, you basically invest the capital into your best ideas. And after doing the investment, you monitor them constantly. You look for new, better ones, and basically that's how the investment management, how the profession of an investment manager looks like.
And what are the kinds of investments? I mean, if it comes to the investment, what does it really mean? Do you invest into stocks, for instance? Yeah, we can say that it's an investment. We can say that buying some houses is also an investment. So what the type of investments are those investments that you're responsible for?
That's a great question. So basically, every investor is unique. There is no best investment class, okay? We are digging a little bit into the investment theory right now, but let's do it for a few minutes. So the goal for you as an investor to have the most efficient returns, which means the highest the returns with the least amount of risk. This indicates that you have to construct your portfolio with different asset classes. The more asset classes there are in the portfolio, the better, because of the thing called diversification, without getting into thick technical details. So basically, every investor of our type, for example, but that applies also to university endowments, to pension funds, to hedge funds, etc. They have I would say 4 to 5 to 6 different asset classes in their portfolio, which include listed equity, private equity, real estate, alternatives, private credit, private debt, I would say these are the main asset classes that most of the institutional investors work with.
So the next question is, how is a finance domain job different when working in a core finance company versus doing the same role in some other companies, for instance, your company? So what is the difference between the companies, and if it comes to your work, your specialization?
So that's a great question, and I often receive it, but let me help you rephrase the question. So the question is basically, for an investment manager, what's the difference to work in the asset management company versus working in a private company? Now, you probably know that, but the asset management company, it manages the money of outside clients, like pension fund companies, right? The private companies instead manage their own money. So the asset management company earns its profits from the management fee, and the private company basically it eats what it kills. Basically, its profit is how much you earned from your assets. So these are two main this is the main distinction between the asset management company, the traditional asset management company, and a private company that invests its own capital. Okay, so the question is, what are the implications for a person like me, for an investment manager, right? So on a high level, in both of these types of companies, my job would be pretty similar. I would still have to strive for the most efficient returns, which means the highest returns with the least amount of risk. Okay, but there are few practical differences in working in asset management company and versus private company. Okay, due to the fact that the asset management company earns its profits from the assets under management, the asset management company is incentivized to attract as much assets as possible from clients. And this usually leads to the situation where the investment manager, who is primarily responsible for managing the portfolio, is also involved pretty strongly into the sales role, which means he has to once in a while show up to the new potential investors, to present the strategy, to try to attract them to basically trust the asset management company with their own funds. Okay, whereas working in the private company, which manages only its own money, okay, there is no such function, which means that this company is not it does not have an incentive to attract external money because it manages only its own money. This means that the investment manager is able to allocate much more of his time to his direct role, which is investing the capital that is provided to him.
Okay, so thank you for a very detailed answer. And you also you mentioned that it is important for you to lower the risks and basically have the least of risks possible. So the question is it important to have, for instance, FRM, which is Financial Risk Management Certificate, or any other certificates? Is it really important, or it's just a paper and basically maybe sometimes you don't really need it, or it is very useful, and while working for this certificate you can really have useful information and knowledge and experience also?
I would put it like this. The investment management profession and the risk manager profession are two different roles. And you can think that the investment manager is like a basketball player and the risk manager is basically the referee, okay? So these are two different professions. Now, obviously, each investment manager has to understand what risks are and how to manage them. It's part of the job, half of the job, I would say. So obviously, an investment manager would have to have a great understanding about risk and how to manage it. But I don't think that an investment manager explicitly needs a certification of financial risk manager and the ones that you talk about. I would add that for investment manager, a much more relevant certification and official academic certification historically has been CFA, the Chartered Financial Analyst certification. So this one is much more relevant to the profession. And I am personally a strong believer in the academic education, and sometimes this point of view of mine is made fun of by the colleagues, by people I work with, because usually it's difficult to think that well, academic education is very important, but you need to have street smarts and those kind of things. But I want to tell everyone who is still a student that in any field that you do, regardless, it's investment management, it's martial arts, it's painting, those kind of things, anything, you have to have strong fundamentals. And I mean strong academic fundamentals. And only then, when you have these fundamentals, you can build the skills, the practical skills on top of it. So many people, at least in my profession, but I think in any profession, they choose to take a shortcut and skip the fundamentals part of the academic part, because this part it takes a lot of time. It's pretty boring sometimes, but this is something I think everyone needs to do who is striving for having a high ceiling of career. Because if your knowledge in any field, let's say investment management, comes only from practical knowledge, at some point you will feel that you have reached your ceiling. And you will have a huge disadvantage compared to the person who has both academic background and practical skills. So that is why I would say that academics and certifications are important, and that's something where everything starts. So your natural question may be, so is it worth it to do like a CFA or financial risk manager certificate, those kind of things? And my answer would be, it depends where in your career you are. Because if you are just starting your career and, for example, you are still at university and you want to get into the industry, these certifications are very valuable because if you go to the job interview, if you send your resume, these are the certifications that all of the employers are familiar with. And especially if you come from lower ranked schools, which are not very well known in the industry, these famous certifications like CFA, financial risk manager certificate, is something that everyone knows, something that everyone in the industry understands how much time it takes to do them, and it gives you like a seal of approval as a potential employee. So that is why I think these things are important, especially when you are young, when you are just starting. Afterwards, when you are like 10 years in the industry, I would say they are not that relevant.
Okay, so thank you. So we would say that in the shortcut, that in the long term, education always pays you well. So that's a great thing for all the students who are watching us right now. Such a motivation, I would say. And you also,
I want to, so sorry for interrupting. I want to give an analogy in basketball, because we are naturally a basketball country, so that's easy to think in these terms for us. So for example, you can think some of the players who achieve high levels of proficiency, like NBA players, they must have very good basic skills like free throws, ball handling, passing, those kind of skills, all right? But we can always find flashy videos on YouTube of players who have like crazy handles, can jump very high, those kind of things, but they never make it to the pros. And the reason they never make it to the pros is because even though they have a very good proficiency in one skill, like handling, dribbling, those kind of skills, they don't have the full package. And those players who play in a more boring style, but have like skills in all of the aspects of the game, they make it to the league. So I would think that this analogy works very well in any field, including investing.
Okay. So it is very interesting, and you said that some of the things, so as I can understand that some of the things are may be boring, but in a long term, it's better to do them than not to do them. And if we talk about boring things, what are the boring things while working as an investment or portfolio manager? The things that you do not like, for instance, or the things that make you, I don't know, lazy or even exhausted. So what are the main pros and cons of your work, to be honest?
So another great question. So basically, as in all professions, there are pros and cons. You cannot avoid that. There are no perfect professions. So I always like to think that being an investor is very similar to being an airplane pilot. So I would say that 90% of the time, the markets are pretty calm. Nothing is really going on with your positions in which you have invested. And I think 90% of the airplane pilot's job is also like sitting there in the cabin, being in place, right? But in the rest of 10% of time, everything happens all at once. So the market crashes or the market suddenly jumps like 30%, right? And these are the moments where you can distinguish between good managers and the bad managers. And these are the moments where basically you are tested a lot psychologically in terms of stress levels and those kind of things. So the pros of my profession, in answering your question, is that it's a super dynamic profession. Every day is different, and you have to be ready and be in place all the time, because it can happen that the US president says something and the market moves strongly. It can happen that China does something and the market moves into another direction, and you have to be always present and ready to react, like a plane pilot, okay? So the dynamics of the job is actually the aspect of the job that is very fulfilling and very attractive, in my opinion. Also, the people you work with in this industry are extremely talented, hungry, ambitious, and that's, in my opinion, the environment in which you want to be in, because that's the environment that helps you grow professionally and personally. So that would be the main pros of investment management profession. Now the cons would be it's a cutthroat business. It's a very well compensated position. That's why it attracts a lot of talent, which means that your competition is the best you can find. And if you want to stand out, you have to work. You have to work a lot. The stress levels are sometimes huge, and especially as the markets move a lot. And if you are not very well equipped with handling stress, maybe you should think about you should think about other fields, not investment management. So briefly, that's how I basically put it in terms of pros and cons of the profession.
And if it comes to your situation, okay, because we understand that right now you're quite successful, you have a lot of experience, you're working for a huge company, and you do understand that you have a nice path, let's say. But let's imagine that you're right now just a student, you just graduated. From your perspective, what were the possibilities for you? What were the priorities for you? What you were thinking about in life? I mean, when you just graduated and you basically needed to, you know, find your own path, understand what you're going to do in life at all, and was it hard to find your way? Did you understand that you wanted to do this, what you're doing right now, instantly, or was it like, you know, a bumpy road with many obstacles, and after a long term you just realized that you want to be investment manager?
Lucas, this is a very long question, so I forgot the beginning of the question, waiting for the end. So let's maybe split the question in a few parts. Okay, so you said that being a successful person. So I don't think I'm like successful person, because it's very relative. if I look at myself like 10 years ago and I look at today's situation, like, okay, you can call that some kind of success, okay? But from the perspective of somebody who is like 10 years older than me, okay, relatively, this is still, nothing is yet gained, okay? So I think it really helps for everyone to think that doesn't matter how much you achieve in your profession, it's very helpful not to think that you are somehow successful. I want to share one moment that I experienced last year that has to do with this observation. Last year, I was in one of the biggest conferences of private equity in Berlin. And the keynote speaker was Stefan Schwarzman, who is the founder of Blackstone, the largest private equity fund in the world. He was interviewed by the moderator. And just to give you context, Stefan Schwarzman is somebody who built the largest private equity company from zero. He is now 74 years old, and he is one of the richest people in the world. So he told the words that I will never forget in my life. He said, well, I often receive a question of Stefan, you built this huge private equity company. Basically, you achieved everything. So how do you see your life? What's the end game here? And he said, what are you talking about? We are just getting started. And to hear these words from somebody who is like one of the richest people in the world, built the largest, the most successful private equity company in the world, who is like 75 years old, it gives you like, it sounds like shocking to hear that from this quite old man and successful man. So I think it is very helpful for each of us to think that doesn't matter how old are you, doesn't matter where in your career you are. It's very helpful to think that you are just starting and you have not achieved anything yet. So I think this mindset is something that really helps for you not to forget to grow. So sorry, Lucas, for this long monologue. So maybe you could just split your question into a few, and we can go from there.
How your perspective looked alike when you graduated? So did you know what you're going to do in life, or you didn't? Because many students have this trouble that they cannot really understand what they want to do because studies, like, you know, you can, for instance, study international business, and after international business, you can be accounting person, you can be a manager, you can be anybody else, yeah? So having this straight line, what you want to do directly, was it easy for you or not? What you thought then?
Okay, terrific question. So basically, it is normal to not to know what you want to do in life. Like even when you are 40, it's a normal question. And when you are a student, it's exponentially more relevant. But somehow I understood that I want to work in investment management pretty early on, and my basically first experience with investment management happened in 2009 when I was a third-year student at Vilnius University, and I joined the Vilnius University Student Investment Fund, not really knowing what investing is, okay? But pretty soon I found out that that's what I want to do for the rest of my life. And for me, it was pretty obvious how to proceed, okay? So I understood at the time that I want to work in the industry, but studying at Vilnius University is not enough because it is not a well-known school. The quality of the studies is pretty questionable, to be honest. So I needed to have some proper education. I decided to go to do my master's abroad, and I was actually admitted to Rotterdam School of Management in the Netherlands, and I got there my master's degree in finance and investments. I did a CFA certification in my first 3 years of my career, and I never looked back. As I said, I knew pretty early on of what I wanted to do in my life. But I understand that most of the students are not in this position. Most of the students, they finish the studies and they still think, well, what should I do next? Okay, I don't know what I want to do. And I think the goal here is to have a mindset that you shouldn't overthink this question. You should better be experimenting and try different paths. So for example, instead of thinking for a year or two of what is my passion, what are my goals, what should I do, you should try something and try to practically see whether it works for you or not, okay? In investment management, we call this flaw paralysis over analysis, where you have many investment options and you are so paralyzed by fear of making a mistake that you make no investment decisions at all. So in career, it's the same principle. You have a lot of options and it's difficult to choose when you have a lot of options. So the key here is basically to try to choose one, see whether it's something that works for you or not, and then move on if it doesn't. So that's how basically I would proceed with this question.
Yeah, so we could say that it is not sure what you're going to gain if you do something, but it is sure that you will gain nothing if you do nothing. So yeah, it is always better to do something.
Absolutely, and I want to add one more, like a phrase that I like to use is basically, we always think when making a decision, especially like a career decision, will it work? And a very good mindset to have that, of course it will work because I will make it work.
Yeah, so it is a great quote and very motivating and useful, I would say. And so, for instance, you said that you did a lot while your first years of career, and if you could, of course, like your experience, your knowledge, etc., those are things that built by many factors. What main factor helped you the most? Let's say this way, to do not do some of the mistakes, or for instance, do something great. So, what was the main factor that helped you the most?
Okay, so another great question. So basically, I think that something that helps you a lot is being very hungry. So all of my life, I think I was like very hungry because growing up in the province of Lithuania, most of the families in those times, you did not have much. So naturally, I was thinking, okay, so how do I get out of this situation? I always had this hunger, this striving to do better in life, earn more money maybe, because of not wanting to be again in this situation where you grow up in the, for example, in my case, in the 90s. So that was probably the #1 factor which led me to investment management and in general pushes me forward in my career.
That's a great lesson for everyone. Which technical skills are important in the industry? So, for instance, what is the role of knowing programming languages? Is it important, or you can go without it and it's okay? Or maybe if you do not know, for instance, programming language, you cannot manage the big investments or something like that. So, what is the role of knowing the technical things that are acquirable right now?
So, okay, let me put it this way. In investment management, there are many different professions. You can be an investment manager, like portfolio manager. You can be a risk manager. You can be quant. Each of these fields require different skills. So I will talk exclusively of investment manager, of the portfolio manager position. Now, these technical skills, like you mentioned, like programming skills, I have to be honest that I never knew programming, and none of my peers who do investment management, like portfolio managers, and investors, none of them know any programming at all. Now, I am not saying that you shouldn't do programming, but I'm just sharing my experience that in none of the career situations I experienced that I need to have programming skills. You have to have good Excel skills, and that's most of what you need technically speaking. But what skills are needed the most in investment management, I think, are the soft skills. The skill to be able to communicate very well, the skill to be able to argue your opinion very well, the skill of discipline, because I would say investing is 90% in discipline and 10% finance, and the skill of networking. These are the main skills, at least in my field of job.
There are many people who, for instance, do not know the programming language, and they would say, for instance, that it is not the path for them, that they will not succeed in this. And your answer shows that it is possible. So it's a very interesting answer, to be honest.
So I want just to add, I know the anxieties that people who do not know programming language have regarding the programming languages. It's like, it's very common. So I know many programmers, I know many lawyers, and I know many investors. All of the lawyers, they want to have investment skills. All of the programmers, they want to have also investment skills. And all of the investors, they think that, well, it would be so great if I had programming or law skills, because these guys are so super smart, and I wish I had these skills. But you cannot have all the skills in the world, so you have to make like compromises. And if you want to go into investment management, I think you should focus more on the soft skills compared to these technical skills. You will not need much technical skills, and if you work as a portfolio manager, as an investor.
Yeah. So it's a funny story about those lawyers and investors and the programmers. And now we have such a fantasy, let's say, question. If you could go back in time right now and change anything, would you? And if yes, what it would be? Or if not, then why? Let's say this way. I mean, in total, like, of course, connected with your career path.
So it is very popular to answer to this question that no, I would not change anything, but it's nonsense. If you had the opportunity, of course, you would change something. So what regards my career, the one thing I would change is that I would have started investing personally earlier. And I always like to use the quote of Warren Buffett, the most famous investor. So he started investing, I think, when he was 16, and somebody asked him, what do you regret most in your life? And he said that I didn't start investing at 14. So basically, for all of you guys who are present in this discussion, I assume that you are like pretty young, probably most of you are students, and I cannot stress this enough, that you should start investing personally as early as possible, because the time is your biggest asset, and if you don't know what compound interest is, you should Google it and learn about it, because it's the 8th miracle of the world. And I again want to stress that you will regret a lot if you don't start investing as early as possible. So that would be basically the thing that I would do differently. More or less, yes.
Okay. So the time, like, yeah, it is important to understand that the earlier you start, the easier it is to start, first of all, because after some time, for instance, you can say that you're too old or something like that and be more lazy. And if you start earlier, it's better, of course. So yeah, I would totally agree with you here. And the last one question that we have prepared before, to be honest, the answer for this question was mentioned a few times before by you, because you have already gave like a lot of tips for our viewers. But like in total, if you could give any kind of tips for all of the viewers that are watching us right now or via YouTube, what you would give if it's possible, like some of the more, even more tips, if you have any, like basically the rules that helped you to be more happy from the life at all.
Absolutely. So I don't want to sound like a motivational speaker here, because I'm not, and I really hate these things. But if you want me to share some of the experience, what would I say to my younger self? What I would advise? I would say that your success in your career is determined by two things. One is your skills, and number two is your network. So you have to work on both of them. Investment management is the profession in which, especially if you come from a smaller country, from a smaller market like I do, it's driven by who you know. It's very unusual to get hired by finding the advertisement in some kind of job advertisement page. Usually you get recommended by someone. So being young like you are, you should put a lot of effort into networking. Of course, you should network a lot with your peers, but you should also not shy away from trying to contact someone in the industry, like who has experience in the industry, who you think is successful, and ask for advice, because usually it's like quite awkward to contact someone who is much more successful than you are, right? But I can tell you that most of the people really like when somebody who is young, who is ambitious, who is honest, ask for an honest advice. So that's something that I would really advise you to do. Networking skills we talked about, that's very important. Other things I would recommend, but that's comes from my own experience. I think, as I said, you have to start investing personally as early as possible and building your wealth. I think it's very important to have a strong hobby. Like, for example, I think one of the best hobbies you can take on is martial arts. It's not for defending yourself if somebody chases you at night. It's not because of that. For example, martial arts help a lot for you to learn about yourself. They help a lot for you to learn to deal with your anxieties. They help to learn how to win. They help learn how to lose. And these skills, which you learn in, for example, doing martial arts, doesn't matter which one. You can apply those skills very well in your professional careers. Trust me. So this is also some kind of practical advice I would have. You have to have a very good hobby, and if you don't have any idea, try out martial arts.
Okay, great. Martial arts, interesting, also interesting. So we are done with our prepared questions, and now we are moving to the questions that our auditory asked. So what is the basis of your investment strategy? Primarily fundamental analysis, or do you take into account other things too, like social arbitrage for short-term investments? If not, because you consider it risky, like basically, what is the basis of your investment strategy?
This is a great question, but it's difficult to answer this question in 2 minutes, and I won't do that. But I will give you suggestions of what you should read in order to come up with your own personal best investment strategy. So there are 2 books I always recommend. One is called Psychology of Money. It's a pretty new one. Read it, it's great. Another one is like a Bible of investment. It is The Intelligent Investor. So I will not answer the questions that regards what is the best strategy, but I will basically lead to the best material on the subject, and you can read that on your own time.
Okay. So 2 books that our viewers could read after. And the second question is then, do you think we as students must go for comparatively riskier routes like equity or more stable routes like debt for investing our savings? If we wish to balance it, how do you think we should proportionately balance the two? So basically like about the risk, because many of the investors, they say that, for instance, when you're young, you can go with more risky decisions because you don't have, house, basically family, kids, etc., that you would be, responsible for. So while being by your own, you can risk more. What do you think about it? Is it better or not?
So I understand that the question is regarding your own personal investing. So the rule is that, as you said, Lucas, very correctly, that the younger you are, the more risk you should assume. Because when you are young, the biggest risk you can take is being too conservative with your investments. So obviously, if you have no family obligations, if you have no kids, if you are just starting out your career, there's not much you can lose. So you should definitely focus on more risky investments like equities. Now, investing in equities in general is risky in the short term. But if you invest for 10, 20 years, it's basically a no-lose strategy. So that's why if you are young, you should go definitely for risky asset classes such as equities, 100%.
Okay, great. And we are moving to the third questions that we have right now, the last one that we have at the moment. So how do you see the cryptocurrencies as an investment? Is it wise to expose 5–10% of our portfolio to cryptos? Do you invest in cryptos? And if yes, then how do you choose between different projects? Because cryptos are, seen very differently from the perspective of investors. Some of them say that it's just a joke. Some of them see it very seriously and basically invest the most of their money into crypto. So what do you think personally about the cryptocurrency?
So I have zero knowledge about crypto, and I have zero knowledge about crypto because I do not consider it to be an investment. So so that would be my short answer. So crypto is not part of my profession because it's not an investment. It's something that can go up a lot in value or go down a lot in value, but that's different from investment. Like, let me give you an example. So for example, what is an investment and what is not an investment? What separates the two? So let's say that you have Coca-Cola shares, right? Every year, the Coca-Cola company sells a lot of bottles of Coca-Cola. It incurs expenses, and what is left is the profits that belong to the owners. And every year this happens. So the company generates cash flow to its shareholders, right? And that's investing, because you get this cash flow. Now, cryptocurrencies do not generate any cash flow. They can go up in value because people like them, or they can go down in value because people don't like them. But they do not generate you any cash flow. But the same applies not only to cryptocurrencies, but for example, to gold, to US dollar, to those kind of things. These are not really investments in a traditional definition. So I cannot say anything about them because that's not part of my profession. But I'm not saying that this is like silly or that's a bubble. I have no idea.
Okay. I mean, we could say, for instance, that crypto is a very different thing from the let's say classic investments for sure, and we can also say that it is more risky due to the fact that it has no such fundamental as a company has and does basically. So yeah, so we have those 3 questions and that's all. And oh yeah, the last one, we have the last one at the last chance. The last train. Should one start off with trading stocks or investing in them as a student?
So I don't think I understand the question very well, but let's say that the question is, should I invest in stocks as a student? And the answer is absolutely yes. You should start investing as early as possible, just like I outlined before.
Okay, and for instance, my personal question, let's say this way, what amount of money, for instance, a student that has no experience yet can invest in the first, let's say, I don't know, investment in the stocks or something like that? What do you think, what is the, like, the percentage of his, I don't know, portfolio of money or something like that, that could be invested into the real first risky investment?
So great question. So how do I invest if I am a student and I do not have a salary, right? So basically, I think, of course, most of the students deal with this problem. Nowadays, there are tools which allow you to start investing with very low amounts of money, like 50 euros per month, 100 euros per month. That's possible. And if you have this ability to invest even those low amounts of money, like 50 euros or 100 euros per month, you should still do it because someday you will have a great salary and you will have money to invest, right? And if you have started investing as a student, like 5 years ago or 10 years ago with small money, you learned of how to invest with small money. So you learned your mistakes with small money. So now when you have a good salary, you already know how to do that. So it's better to start even with small amounts when you are a student, instead of waiting when you are like 30 or 35, having a good income, and then starting investing all in now. Because there are less lessons to be learned when you start investing. Like not only lessons like what company should I choose, etc., but lessons, for example, how to deal with losses, how to deal with market volatility, how to deal with uncertainty, how to deal with the fact that stocks once in a while crash by 30 or 40%. So these lessons you can only learn if you have real exposure with your own money. So better to learn these lessons with small money than with large money.
Yeah, sure. I totally agree. And I would say that I guess that the first investment is more about the understanding of rules, how it works, how the game is going to be run, than really the price that you can get. So it's not wise to, to run for a big money when you invest at first, but it's better to understand what are the main, let's say, rules and how you should behave, because it's a whole book of psychology could be written about the first investment as it is, I'm sure. So
Absolutely.
yeah.
Absolutely.
So to be honest, that's all from the questions part. And I'm very glad that we really do that and managed to keep it in a time that we wanted to give for that. Thank you a lot, Karolis, for the talk. Thank you for all of the people who were watching us today. I hope that you really like that and that you have some of motivation for the first investment, for instance, in a short period of time that is going to be in future. I'm sure that it was very useful for all of us. And once again, thank you, Karolis. If you would like to say a few words, then
Sure.
I'm passing the word.
So great questions, great conversation. I'm always happy to have this, and it's a very interesting coincidence that I understand the IFSA organization is based in Rotterdam, the place where I basically got my master's and spent a year living in. So it's very interesting this fact. But anyways, I hope it was valuable. I hope that you really think about what we discussed today, and I hope you take something from it. So great time, great Sunday evening.
Yeah, so we would say that it's a kind of, karma circle if it comes to the situation that you just mentioned.
Absolutely.
So yeah, so thank you all of us. Thank you all of our viewers. Thank you, Karolis, once again. And then we are done. We hope that you will check the first talk if you didn't. And please, subscribe for our YouTube channel if you would like to see upcoming talks that are going to take place in future. Thank you all, and goodbye, Karolis. Have a nice day.
Thank you.